Ladies and gentlemen, good day and welcome to Q1 FY26 earnings conference call of Share India Securities Limited. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Amit Kumar Sharma from Adfactors PR Investor Relations team. Thank you, and over to you, sir.
Thank you, Bhavya. Good evening, everyone. On behalf of the entire management, I thank all the participants present on the call and wish you a very warm welcome to our Q1 26 earnings conference call. To guide us through the results today, we have with us the senior management team of Share India Securities.
Sorry to interrupt, sir. Sorry to interrupt. Sir, your voice is cracking.
To guide us through the results today, we the senior management team of Share India Securities Limited, represented by Mr. Kamlesh Shah, Managing Director, Mr. Sachin Gupta, CEO and Whole-Time Director, Mr. Rajesh Gupta, Director, Mr. Abhinav Gupta, President, Capital Markets, and Mr. Prabhakar Tiwari, who has joined us as the head of the Wealth Tech Division. Before we begin, please note that this conference may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on the date of this call. These statements are not a guarantee of future performance and involve risks and uncertainties that are difficult to predict. We will commence the call with the opening brief by Mr. Kamlesh Shah, Managing Director, followed by the business highlights from Mr. Sachin Gupta, CEO and Whole-Time Director. After this, we will open the forum for the Q&A. With that, I will now hand over the call to Mr. Shah to share his opening comments. Over to you, sir. Thank you.
Hello. Thank you, Amit ji. Good evening, everyone. I welcome you all to the first investor call to share the performance of the company for Q1 financial year 25-26. Currently, we are witnessing a lot of headwinds, mainly because of the external factors and tariff-like issues. However, the industry in the first quarter has been experiencing supportive development that we are positively influencing our performance. A trend that is now clearly being realized. We are especially excited by the immense potential yet to be unlocked within the financial service sector. Below are the detailed financial results for Q1 2025-26. First, we will discuss standalone performance for the Q1. Quarter-on-quarter comparison is really very exciting. The total revenue from the operation for Q1 was 273 crore compared to 188 crore for Q1 2025. Impressive 45.6% increase quarter-on-quarter basis. Profit before tax and profit after tax for Q1 financial year 26 was 89 crore and 69 crore compared to 17 crore and 16 crore for Q4 of financial year 2025. This represents significant increase of 427% in profit before tax and whopping 324% increase in profit after tax quarter-on-quarter basis, highlighting our strong operational efficiency. Coming to year-on-year comparison for the standalone results, total revenue from the operation was 273 crore compared to 324 crore for Q1 financial year 2025, showing a decline of 16% year-on-year basis. Strictly speaking, year-on-year basis comparison does not give any comparable solutions, because the situation in Q1 25 was different, and thereafter, we had a lot of development on international front, on tariff front, on these spikes, and many other disturbances, which has affected the performance of last 2 quarters of the last financial year. However, we have overcome that particular situation, and now we are on a better footing. Profit before tax and profit after tax for Q1 financial year 26 were 89 crore and 69 crore compared to 94 crore and 72 crore for Q1 financial year 25, showing a decline of approximately 6%. Earning per share for the quarter on standalone basis stood at 3 rupees 15 paise on face value of rupees 2 per share, reflecting healthy profitability per share. Coming to the consolidated financial numbers, quarter-on-quarter comparison, the total revenue from the operation for Q1 financial year 26 on consolidated basis was 341 crore compared to 240 crore in the last quarter, making a substantial 42.57% increase compared to the previous quarter. For Q1 financial year 26, profit before tax was 111 crore and profit after tax was 84 crore compared to profit before tax of 23 crore and profit after tax of 19 crore in the previous quarter. This reflects approximately 379% increase in profit before tax and 353% increase in profit after tax quarter-on-quarter basis, demonstrating robust growth across our consolidated entities. Coming to the year-on-year comparison, the total revenue from the operation for Q1 was 341 crore compared to 414 crore, decline of 17.5% YOY basis. Profit before tax for Q1 financial year 26 was 111 crore compared to 131 crore in the Q1 of financial year 25, and profit after tax is 84 crore in Q1 26 compared to 103 crore for financial year 25, showing a decline of approximately 18%. Earning per share for the quarter has been recorded as 3 rupees 86 paisa on face value of rupees 2 per share. We have declared dividend of 30 paisa per share of the face value of rupees 2 per share. The company has shown strong performance and significant rebound from last quarter's result across all the segment. We are very pleased with the result, and we believe they set a positive tone for the rest of financial year. The past few years have marked our transition from traditional broker to full-fledged tech financial service provider. The company has remained focused and taken right steps with right people to achieve this transformation. Carrying this legacy forward, we are now venturing into new segment of WealthTech, a comprehensive technology-driven product designed to serve all classes of investors. In line with this exciting development, we are pleased to announce that Mr. Prabhakar Tiwari, a well-known name in the industry, has been entrusted with the responsibility of this project. And we welcome Mr. Prabhakar Tiwari to Share India family. He is with us on this conference call, so he will give you detail of the project, and Sachinji will give you overall view of the developments and the new initiatives that we have taken and the way forward. I would like to acknowledge exceptional contribution of the team led by Mr. Sachin Gupta, CEO, for their efforts in creating opportunities and converting them into results, which has significantly contributed to the historic growth of Share India as a group. To conclude, I would like to reiterate our commitment to growing sustainably and creating robust ecosystem that provide sustainable long-term growth opportunity for all our stakeholders. Thank you. With these words, I would like to hand over the proceeding to Mr. Sachin Gupta. Thank you.
Thank you, Kamlesh sir. Thank you for the detailed presentation about the Q1 results. Good afternoon, everyone. Thanks for taking time out for this con call. As Kamlesh sir explained, Q1 especially been a very satisfying quarter as we have seen a good rebound from the Q4 of the last financial year. And this particular quarter was a very happening quarter for the company, like a lot of new initiatives and steps have been taken, which we were trying since last some months and maybe years. And all these steps are forward-looking and towards the commitment to our investors, where we say that Share India is here for to be a more stabilized company, focusing on the diversified revenue and run by the hardcore professionals. Different divisions are run by the hardcore professionals. So what we achieved in this particular financial year, first of all, I would like to highlight that MTF book, which was dropped to 186 odd crores by Q4 last financial year, has jumped by around 40% in this quarter, and we have closed the book around 315 crores. So with MTF, it gives us more stability in our revenues. So that also helps in increasing the penetration towards the retail side of the business. And so the core thing of it, and if market the way market is going, so this particular financial year we can see the MTF book is growing at least 20% or maybe 30% from here on. And another thing what we achieved is we closed a 100 crore NCD for securities in this quarter, which was at 10.75%. And the best part is a lot of institutions, retailers, and HNIs have participated in NCDs, and our NCDs are very well accepted in the market. That's the first time in our history that we came up this kind of product, and this was well accepted, and this opened a new door for the company, it will for the further fundraising for the in the future. And another big step towards the future is we got the permission from the SEBI for the PMS license, which we explained in the last quarter that we have applied, but we got the permission from the SEBI. And luckily, as as we are committed to work with the professionals, I cannot name the professional right now, but that will be disclosed in coming months. So one guy from the industry having more than 18 years of experience with the different mutual funds and hardcore guy of this industry has agreed to join us as a PMS. The first scheme will be launched by September. By September 1st, scheme will be launched on the PMS side. So this is a very, the forward-looking step. We were looking to enter into the fund management system where AIF and PMS should be part of our revenue and product offering. So PMS is the first step. Once we get stabilized with this, then definitely we have AIF in our mind. Going further, we might go towards the ASR also. PMS, as I said, again will be run by the professional team, and we are hopeful in coming years PMS will also become a good revenue stream for the company and stabilizing the overall revenue for the Share India. And going further, another project which we announced in this quarter is Project Drone. Project Drone is a project that Kamlesh sir explained is a project towards the wealth tech company we want to launch, and Mr. Prabhakar Tiwari has joined hands with Share India. It's a wealth tech startup by Share India and Prabhakar. So the idea is that as we all know, we all speak also, next decade belongs to the Indian retailer. So if India is going to grow, why Share India should not be the part of that growth by offering at least some products for the retailers? Primarily, we are a B2B company. And I appreciate my management, my board, that they gave us the permission to enter into the hardcore B2C business. It's very tough for any B2B company to enter into B2C. So you need courage to do that, and the management and board showed that courage and backed us. And Prabhakar is here. Prabhakar is a veteran in this industry. He was chief business officer of Angel. He has seen the growth of Angel from 10,000 accounts per month to 10 lakh accounts per month. He has seen all this journey. He has, planned, and he showed his commitment towards his business. And now the Prabhakar is in, and we have just started this project, and we believe Prabhakar will explain in his comments after me that when he will commence the business. The goal is it's not only the broking, it is not what Zerodha is doing only. So it's a complete financial product with broking, with wealth products, with financing, with everything. So next 10 years, as I said, we believe that if we somehow conquer this will further stabilize, and it will not stabilize. It will help us grow far more, what we are expecting with only one way of like B2B business. So you guys can see that Share India is constantly taking steps every quarter towards entering into the B2C space of the country, like institutional business got started, PMS now, MTS, now Project Drone. So neutral algos, again, Prabhakar will be taking the lead in taking in neutral algos also. Now that product will also be offered to the clients via this Project Drone only. And as we all, as Kamlesh has said in commentary, we have seen so much regulatory challenges in last financial year, especially Q3 and Q4. So we believe that those things are now stabilizing a bit, and business is picking up, which is shown in the results of Q1. So if the broadly, we believe that regulator is broadly done with the last changes. So if there are no much disturbance from the regulatory side, so we believe this particular financial year will mean somewhere 20-25% growth based on last financial year. One more thing I want to add here, that we got permission from the SEBI and exchanges for the merger of Silverleaf. This is another big thing which was stuck with the regulatory approval from the exchanges and the SEBI. We just received it 15 days back, and going further, Silverleaf is going to be a great acquisition. They are expert in HFT trading side and quant trading side. So they will again now will move to the NCLT, and I hope in next 6 months this merger will happen. And with the Silverleaf coming in our thing, it will again boost our revenues from the different line of business which we are not doing right now. Again, focus is on stabilization and growth both. So this is from my side, and thank you for giving me this chance to explain about the quarter and the future growth. Thank you very much. And Prabhakar, over to you, if you can please explain about the project growth. Thank you, guys.
Yeah. So thank you, Sachin ji and Kamlesh ji. Good evening, everyone. I am delighted to join today's earning call alongside the Share India leadership team. I am Prabhakar Tiwari, with more than 2 decades of leadership roles across finance, consumer, and technology. In my last role as Chief Growth Officer of Angel One, I had the privilege to work alongside the management there to scale Angel One to number 3, top 3 brokerage in the country, and transform a traditional brokerage house to a full stack fintech platform. I extend a warm welcome to our investors, analysts, and valued partners as I talk about Project Drone today. Over the past few months, I have had the privilege of working closely with the team at Share India to work towards building our next big growth engine, Project Drone, Share India's WealthTech venture. I would like to briefly share our vision and why we believe it is a game changer for both Share India and our investors. India's wealth management space is at an inflection point, with over 80 to 100 million plus mass and emerging affluent investors seeking holistic wealth guidance beyond trading in Tier 2 cities represent a massive white space and differentiated market entry opportunity. Project Drone leverages Share India's strength in institutional-grade trading infrastructure, AI algo-led tools, and strong compliance DNA, while expanding into wealth tech, capturing a broader share of clients and their investable capital from rupees 10 lakhs to rupees 10 crores. Unlike single product brokers or legacy wealth platforms, Project Drone is designed as a bundled AI algo-driven wealth platform, seamlessly integrating trading, investing, advisory, and credit, especially for underserved Tier 2, 3, 4 geographies in India. I am glad to share with the investors that we have assembled a founding team with deep fintech and tech experience from firms like Angel, Upstocks, Google, among others. And this is just a start. More people are supposed to join us in coming quarter. Our early surveys and pilots with 1,000 plus retail investors confirm the strong appetite for an integrated wealth platform, which Project Drone envisage to build over time, starting from a strong MVP in next 6 to 9 months. In short, Project Drone is designed to future-proof Share India's growth, diversify revenue beyond trading fee, and capture the next wave of India's wealth creation story. Project Drone, in my opinion, is not just a growth driver, but a reflection of Share India's ability to innovate and lead. We look forward to welcome your questions during the Q&A. Thank you, and I will hand it back to the Bhavya, who will open to Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Jitesh Sakaria, an individual investor. Please go ahead. As there is no response from the current participant, we will move to the next question. The next question is from the line of Neha Shah from an individual investor. Please go ahead.
Good evening, sir. Sir, can you break down the performance across the verticals like broking, proprietary, like which segments are contributing more to the top line, and what's the margin expansion?
Sachin, you will take the call. This particular quarter, what we saw that, as I said, MTS interest income getting stabilized or going up. Broking business has shown good growth, and the major growth has come from the prop side. And in last quarter when the numbers came down, so the commentary from our side was there was some notional M2M losses which we need to book in the balance sheet. That numbers has recovered a bit. So putting everything together, some recovery from the investment side, business getting good, stabilized, and MTS and broking side. All things have been improving the margins and the numbers. Also, primary market activities have picked up since in the last quarter. So everything put together has contributed. Abhinav, if I have missed something, can you please add?
Sure, sir. So thanks a lot for your question, ma'am. So as Sachin sir has explained, in last couple of quarters there has been a lot of flux in terms of the regulatory landscape changing. As continuously said in our con calls, we now see some sort of stability coming into the system, and as you can see, the broking numbers have started, stabilizing and seen some marginal growth as well. Major improvement that has happened in terms of the fact that the interest income by the virtue of MTF income has sort of started taking a leg up, which is a very healthy sign, because in the long term scenario we believe the interest income would be a very major component of a broking component specifically. Also, by the virtue of the cost cutting measures that we had done internally in the last quarters, have ensured that the cost element remains same while the business has started recovering in this quarter. And as Sachin sir said, along with it, some redemption, some benefit of the interest or the investment benefits that were there in terms of losses last quarter have started coming up on the improvement side, which has led to a margin expansion both at the EBITDA level and PAT level.
Okay. Thank you, sir. And sir, so also wanted to know about the new client acquisitions or any targets you have set for this year, and can you explain on like what's the strategy to scale further?
Ma'am, we have been very continuously talking about client acquisition, and U-Trade Algos has been a very beneficial product for us in terms of acquiring clients. While that product has been now in line for almost a year now, as discussed on this call, we believe there's a lot more space apart from just broking in terms of client acquisition. With Prabhakar ji on board, we believe that the wealth DIY and the wealth technology especially would be a game changer from the long term scenario. We are not trying to compete on a quarter on quarter basis with other broking houses on this regard. We believe building a sustainable new digital platform with much more capabilities beyond broking would be a game changer and a better customer acquisition strategy in the longer run. Prabhakar ji, if you can just want to add some point about customer acquisition, that would work.
I want to add something here. So, ma'am, with the intent of expanding our offline retail business, so Share India has opened branches in the Tier 1 cities, especially in Calcutta, Ahmedabad, Delhi itself, and Patna. And we are focusing on all these cities and opening our own branches. So the intent is to serve the clients with for the equity services and wealth products also. So our base is expanding in terms of offering more wealth products like mutual fund, FDs, and debenture selling, and also equity products. And secondly, as I explained, primary IPOs, we are also doing really good these days. So number of clients, they are going up. Intent is also to expand our base, our own base in the different parts of the country and in the offline side. So we primarily focus on offering multiple products to the retail customers now.
Okay. Thank you, sir. I'll be back in the queue. Thank you.
Thank you. The next question is from the line of Mayank Sharaf, an individual investor. Please go ahead.
Yeah, hi, good evening, everyone. So the first question was regarding your project drone. It was very well explained by Mr. Prabhakar. I just want to know if you have some growth plans, if you could share some insights.
Yeah. Sachin, should I take it?
Yeah, Prabhakar, please go ahead.
Yeah. No, thank you, sir. I mean, that's the most relevant question. And I mean, with the kind of, Share India setup that we are incubating this WealthTech venture, we believe this will play a large role in expanding not just the revenue top line for Share India, but also increase the margin expansion which is required. And we also believe that this will have a complementary and catalytic impact on other businesses of Share India. So in terms of growth plan, I mean, I'm not in a position to share a specific number at this juncture, but we will move very fast. And the reason for the same is that we have assembled a very experienced team as a part of this startup venture of Share India, who are coming from a very mature, scaled fintech experience. And Share India already has a lot of expertise around trading, compliant DNA, regulatory know-how. So I believe we'll hit the ground running, and I expect our MVP to be out in 6 to 9 months. And when I say MVP, mostly the minimum viable product, people look at few key features with minimal resources as they go to the market. But our MVP will be very strong, and we will be testing multiple revenue driving features and customer acquisition features as we go to the market. And in my opinion, as we start progressing from MVP, you will see the impact of this venture both on the top line and bottom line of Share India very soon.
Thank you so much. I have another question. So, like, what are your views on the turnover at the exchange level, given the regulations around derivative trading?
Yeah. Sachin, you would like to take it?
Kamlesh sir, do you want or should I answer?
Yeah, I mean, you can start, and then if there is anything left, then I'll chime in.
So we have seen that exchanges volumes and overall market volumes are coming down because of the regulatory challenges and the spikes and Jane Street. So many things are happening in the industry. So as we explained, the regulatory changes believe that they are stabilizing a bit, and regulator is also of the view, and now they have changed their view, and they're very accommodative in their stance and listening to the industry. So going further, we believe exchanges will be more innovative in offering more products. And like I said, people are, kind of in a mood that, again, they are trying their strategies because with the current regulatory environment. So not exactly, the kind of volumes we were having like 6 months ago. But yes, volumes will not drop from here, and they will start going up in maybe a quarter or two. And but it's hard to comment that when we can see the exact numbers were happening in 6 months ago. But yes, things will be better from here. I think we have already touched the bottom from the volume side, and exchanges are very positive that in coming 2 to 3 quarters, exchanges volume will be far better from here on.
Okay, thank you.
Yeah.
Okay.
Yeah, here I would like to add 2-3 lines.
Yeah.
We have emerged from the regulatory headwinds. We have used this difficult time to consolidate and to take new initiative. We have broadened our revenue stream so that we are more sustainable, and each vertical contributes revenue to the organization or on the consolidation basis. We believe that the last leg of disruption, namely the tariff war, will also get resolved as government is proactively tackling this issue, and we are taking new initiatives like increasing our stake in Metropolitan Exchange, and this is just not investment, but this will also provide us one more platform where we can expand our activity, we can get new products, and this will add to our turnover. So I think the difficult time should be behind us, and there would be stability in the turnover, and going forward, we feel that this year could be better. As Sachinji has already pointed out, we'll have decent growth this year. Thank you.
Thank you so much.
Also, I would just like to add, as explained by both Sachin sir and Kamlesh sir, along with just the stability into the ecosystem, we believe the new innovative products being offered by different exchanges across the board would be really helpful for broker like us going forward. Actually.
Okay, thank you.
Thank you. The next question is from the line of Kunal Chaudhary, an individual investor. Please go ahead.
Hello. Am I audible?
Yes,
Yeah, you're audible.
Thank you for the opportunity, and congratulations for the nice recovery. I have one question regarding the shareholding pattern. As I can see, in the last few years, for so many years, there is a continuous reduction in the promoter shares. Okay, can I know the reason behind this?
Yeah.
Abhinav?
Yeah. So,
Yeah.
thanks for your question. I think the reduction that you had been seeing across has been very marginal, and that has to do with a couple of factors. Number one, the acquisition strategy that the company employed from 2017 to 2020, and specifically because there was a right issue that was brought out in 2023, which was fully subscribed by the second half of 24 or 25 fiscal year. I think because of that there was some dilution. The promoters have not sold any share, and I think if you see from last couple of quarters, the shareholding pattern was on the stability factor. Just to answer your question in a more pointed way, the promoters have not sold shares. I think all the dilution has been because of either acquisitions or new capital being issued to new investors.
Okay, thank you for the clarification. And I have one more question regarding the cash flow statement. There are last two financial years, like March 2023 and 2024, there is a negative cash flow from operating activity. So, can I is there any? But this for March 2025, the cash flow from the operating activity becomes positive, and it becomes like 6 crore.
So I think you are talking about the full years. You need to understand that ours is a financial company, and all the money invested into the FDs or any other investment product is also taken as an operating cash outflow, and hence basis of that you might see a negative operating cash flow. But I think for a finance company, just looking at a pure play cash flow from operations would not be a right metric. Because a lot of investment related are classified as operating activities and taken in a negative cash outflow, essentially. So you need to look at the overall cash.
But if we compare before 2023, March 2023, it was continuously positive side, like 400 crores, 230 crores, 68 crores. Okay, but since March 2023 it was minus 170, then March 2024 it was minus 300.
See, I think it is only because of some investments that might be there.
Yes. Abhinav, I think that is because of the investments. Earlier, we never used to do any investments. So we did some strategic investments in last 2 years, like Master, like Swastika, like MSCI. I think that is the primary reason.
Yeah, but I think even those amounts would be smaller. I think it has to be a larger context. I think we can address it on a one-on-one at a later time. But as I said, cash outflow from operations for a financial company is not the right metric completely to look at.
Okay, thank you. That's so much.
Second thing, here I would like to clarify that all the investment that we have made are all business investment. I mean, it is not pure investment, and these are all strategic investment, which will pay very rich dividend in terms of expansion of our business activity and getting like-minded brokers on board and to broaden our revenue streams. And MSCI, MasterShare, and Swastika, all are from the same industry. So what we are focusing, and partly, because of the merchant banking activity also, we need to invest something in the company that, where we are merchant bankers to be market makers for the SME segment. So all the business, all the investments are related to business itself, and these are going to be paying rich dividend in coming months. Thank you.
Okay, thank you.
Thank you. Before we take the next question, we would like to remind the participants to press star and 1 to ask a question. The next question is from the line of Prisha Shah, an individual investor. Please go ahead.
Hello. Good evening, sir. I have a couple of questions. First one being, what steps are being taken to scale our insurance and mutual fund distribution business, especially in the tier 2 and below cities?
Okay. You want to ask both, or should we start the answer, ma'am, accordingly?
Maybe you can start. I can go on with other questions not related to the same business. So.
Yeah. So, I think your question is around regarding the mutual fund business and the insurance business.
Yes.
As we said, as Sachin sir has already said, we had opened branches. We are going both offline and online in both these products. Offline, we are opening branches in the major epicenters of the businesses, including Kolkata, Patna, and Delhi branch itself, where we are just not trying to cater to the broking part of it, but go beyond broking and into the other part businesses, including both insurance and mutual fund. Insurance business, we do a lot of cross synergy from our merchant banking business as well, because we get a lot of clientele from those businesses and are able to, cross sell a lot of other products by those virtue. Also, in terms of insurance and mutual fund both, as Prabhakar is there, we believe while we had different suits available with us in both in terms of mutual fund, insurance, and other products as well, I think that is what we are trying to accumulate into a single platform and offer to our clients in a digital version. So the acquisition strategy is both physical and digital, along with cross-selling from the other synergies that we get from the other business divisions.
Okay, understood. And so my other question is on our institutional client base. Currently we are having it at around 140 odd clients. So how are we planning to grow that institutional base beyond that?
Yeah. So, ma'am, from an institutional clientele, you are absolutely right. We currently have an empanelment of 144 clients over there. I think we have seen a massive growth in this business in the last 2 years that we have started as this business. And now we see some sort of stability there. But as you said, we currently see easily a growth by being a nascent player and being very tech-enabled in terms of different product suites of in-house tech capabilities. We believe we will continue to acquire customer and gain market share in this. But being a different kind of nature, the clientele would be not as high what you would expect in a retail business, but easily even from current levels, we expect on every quarter to grow by 20-30% easily.
See here, madam, here I would like to clarify. The client for institutional business is something different. These are all FI, FPI, mutual fund, and domestic institutions. Their number will be like this only. In fact, this is a great achievement that within a year of operation, we could have 140 institutions working with us. This cannot be compared with the retail clients. Retail client base is different. These are institutional clients, and to acquire 140 clients, institutions, to work on our Insti platform, that itself is a credit, and the Insti desk is performing very well. Normally, it takes about 3 years for break-even, but we have pleasure of getting break-even in the first year itself. So the institution is extremely well, and it has opened up new types of opportunity, and going forward, we will do even better. Thank you.
Okay. Thank you so much. That answers my question.
Thank you. The next question is from the line of Ashish Jindal, an individual investor. Please go ahead.
Good evening, sir. So as of now, most of our revenue and profits come from proprietary trading, right? All other businesses are quite small in comparison. So I wanted to ask you, how should we see your business 5 years down the line? I'm assuming that the proprietary business shall continue to generate good ROEs. But what to do with all of this cash now? What businesses can you scale? Because I do not think that market will give good valuations to the proprietary desk part of the business. But what proportion of our PAT can we expect to come from other businesses 5 years down the line?
Yeah.
Sachin, you can start.
Sachin sir, I just want to clarify a couple of points before you start. I'll hand over. So sir, thanks a lot for your question. I think I'll clarify that not most of our revenue, it might seem from a revenue perspective that most of our revenues come from proprietary trading, but at the bottom line level, not more than 50 or 55% of our profitability comes from proprietary trading. Rest profitability comes from all the other segments combined. So just to clarify on that. But rest, Sachin sir, you can start and then we will all follow up.
Yeah. So the point you're making is, you guys can easily
see, and it is very noticeable that since last 3 years we are making very sincere efforts in different verticals, to go away with to start revenues with the in B2B business into different verticals, like merchant banking business is one, NBFC business, institutional desk, insurance side of the business. So all these things we are doing since last 3 years, and every 6 months we are trying to add some more verticals where we can enter into the retail side of the overall business side. So like MTF business we started 1.5 years back. Retail branches now we are opening. Now we have started distributing wealth product to the sub-brokers also. So all these things. So if you can see, last year merchant banking division did really well. Even if this year merchant banking, first time we have 2 mandate of main board IPOs. So the quality of company is far better. So we are growing in every vertical slowly and gradually. So growth is in a very organic process. We cannot be very aggressive. It can backfire also. Every vertical is led by some professional. Like we have a separate CEO for insurance. He has full independence to drive his own vertical. Abhinav is doing one. Desk is led by Kalpesha. So different guys are with having lots of experience behind them. So diversifying into different verticals and leading in their own verticals. So that's why the earlier 3 years back, the bottom line was around 80-85%. Now it has come down to 55%, as Abhinav has explained. So going further, again in this quarter only, we are starting PMS, and Project Drone is already, as explained by us. Prabhakar is sitting here. If intent was not there, then Prabhakar and PMS and then incident, all these things might not be happening. So what we are doing, we are keeping a close control over our cash flows. The cash flows we are generating by our prop business, we are using those cash flows to diversify into other verticals where we are serving to the clients, maybe B2B and now B2C also. So I think this is the best case scenario and best strategy, and extreme rare case where you see a hardcore B2B company working into different verticals. And now our goal is not that we are not only focusing on the growing our PAT numbers, growing our prop. Our focus is stabilization and participation into different aspects of this business. So that intent is clearly shown since last 3 years, and going further we'll go deeper into it, and with the people like Prabhakar, the Project Drone, PMS, all these things. And now AI is also in our kitty. So we are planning for it after 1 year maybe. So continuously we are, and you will not see any big names and big addition on prop side. Correct? So all these things we are doing, and intent is there, and also use of this cash flow is a fabulous strategy I think our management has done. And going further, we are hopeful that revenue from the prop will, overall revenue will grow. Even the revenue from prop will also grow. But the percentage of prop revenue should drop to 30-35% next 3 to 4 years. That's from my side. Abhinav and Kamlesh.
Can I add some few inputs?
Yes, sir. Yes, sir.
See, we have unique business model. We are focusing on algo-based solutions and automations. And if you want a breakup of the revenue, out of 100 rupees that we earn on the consolidated basis, 25 to 30% comes from the subsidiaries. We have about 8 to 10 subsidiaries which contribute positively to the consolidated revenue. Out of the balance 70, 45-50 is contributed currently by the prop desk, and 20-25% is contributed by the retail investors. Now, we have net worth of 2,400 crore as of June. And, this also, the prop desk also gives us opportunity to earn money out of the surplus fund that we have. And, prop desk is a door to attract customers. Whatever strategies we, use for our business, we offer the same to the client. We offer the same platform to our clients. We also offer them strategies so that, they get attracted and they get complete business solutions. And that is where the, lot many clients or the HNIs or the brokers are coming to us and joining our platform. In addition to that, the new initiatives that we have taken on PMS side, on Insti side, and the recent one on the retail side by with Mr. Prabhakar Tiwari, all this will rightly increase our revenue stream from the retail investment to a higher side, as Sachin ji has already explained. Thank you.
Sir, just to add on that part, like all of our businesses are good cash generating businesses. So can we anticipate that 3 years down the line, 4 years down the line, the company can be a good dividend paying company?
Currently, we have restricted our dividend payout to 12% of our PAT on a standalone basis, because we need constantly fund for expanding our business activity and increase our foothold in the industry. But whenever we will have surplus funds, or whenever we feel that the funds are not generating more revenue then the individual our investors can earn, we will definitely reconsider our policy and increase the payout ratio. But right now, as we have mentioned earlier also, that we are opening new stream like MTF and other things where we require more fund. And we have currently MTF book of around 300 crore, which we may take it up to 1,000 crore. So this will all require a lot of investment. This is a growing company and we have a lot of business opportunity, and with the kind of diversification and the business verticals that we have created, it gives very good opportunity for us to gainfully deploy the fund available with us, and that is why we are little conservative on the dividend payout policy. Thank you.
So just last question. We already have quite a good
interrupt, sir. Sir, can you please rejoin the queue, as there are several participants waiting in the question queue?
So just very brief question, sir. So what will be a star vertical in the future?
Sir, please rejoin the queue.
Okay.
Thank you. The next question is from the line of Kyati Devani from Aditya Birla Capital. Please go ahead.
Yeah. Hello. Yeah, so just I wanted to ask one question. So in the consolidated revenue which we are seeing for Q1 FY26, so there is a component for net gain on fair value changes, like which has spiked up a lot during the quarter from last quarter, which is Q4 FY25. So sir, can you explain what is the reason for this increase which we can see?
Sachin sir, you want to take or should I start?
I will just start, then Abhinav, please take it. So the component you are seeing is a combination of two sides. One is the prop income and another is the change in the investment value from the last quarter. Okay. So as I explained earlier, so because this quarter was good for overall prop business, so prop number has gone up. And as I explained, in the last quarter, there was a fair value loss of 40 crores because of the drop in the market. So that that particular fair value is around 16 crores. So overall, it's a combination of two things: prop income and change in the fair value. So that's why the number has gone up. Abhinav, you can explain.
Yeah. So, ma'am, thanks a lot for your question. I think the number you had, as you said, is the net gain fair value changes, and explained by Sachin sir, is a combination of both these incomes, which is proprietary income and investment income. Proprietary income we were doing around 250 crores a quarter before all the regulation flux started happening, and that number started dropping because of all the regulatory tightening that was happening. And as explained on this call earlier, that we have just come from the regulator headwinds. So the proprietary income essentially from because of the tightening in the derivative market had dropped in the last quarter. Along with that, we also had a double impact because of the inventory loss on the investment that we had. And as sir said, this this quarter has been good in terms of both the growth of the derivative business again coming into the fore, where we see even at a consolidated exchange level, we now see the volumes being stable, giving some stability, and we being a pioneers in terms of the technology are able to capture a better market share in the entire equation. And also we have recouped some of the inventory losses that we had to take on the balance sheet last year. So that's why from a quarter-on-quarter perspective, you see a very big jump. But if you look at from a year-on-year perspective, you would see stability into the system, essentially.
Okay, got it. So, sir, out of this 218 crores which is there, so how much would be for the fair value changes and how much would be for the prop income?
Ma'am, as sir said, yes. So on a rough estimate basis, as Sachin sir said, in the last quarter, we took an impact of around 40 crores in this line item. And of this 40 crores, we have recouped around 16 crores in this line item this quarter.
Okay. Okay, so 16 crore would be the change, fair value change, and balance would be from prop income.
Yeah.
Okay. Yeah. Thank you. Thank you.
Thank you. Ladies and gentlemen, this was the last question. I now hand the conference over to Mr. Kamlesh Shah for the closing comments. Thank you, and over to you, sir.
Thank you for participation in large number. Your inputs are very valuable to us, and this also gives us insight into our business, and we try to explore all the opportunities that are coming in our way. And with the expanding team, we are confident that we are best placed, and the unique business model that we have gives us also an edge in securing business. So thank you for your inputs, and thank you for your support. It is your support that has given a lot of confidence to us, and it's an energy for us. And going forward also, we look forward for your support. And thank you again for attending this investor meet. Thank you very much.
Thank you. On behalf of Share India Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.
Thank you. Thank you, everyone.
Thank you, everyone.
If you found this video helpful, please like, share, and subscribe for latest upcoming videos.